Okay.
कौन सी बात है? 10 एक दोनों you're blind yeah unpack
कौन blind आ रहे हैं? हाँ blind आ गए.
कौन दे दो 20
ये दोनों सीन. Second time.
30 मिस का नंबर होता है.
Third time.
40
ये लो रे.
double 50 first
Second.
10 second 20 30 50
अगले पेयर घेऊन कोण कॉम्प्रो करणार?
10 ये बोले
ओए
30 तो तेज बोलो 40 तो देखो देखो 50 एक पैर गया
एकटा पेयर गेलो.
बहुत आसान है
दुसरा होईता आता भाई. आता दुसरा होईता.
ना मुझे पैर ना मुझे देखा पैर
पेयर रे सगळे पेयर.
कॉम्प्रोमाइज करणारे बरे
ऑले ना तुम्ही.
40 हेलो Dari mo compromise. Compromise to check pa yun natin. Okay. Compromise ko. Okay.
Yo.
I knew you had a good cut. Yes.
I had good cards.
If. Yeah, if. This company would. Sure. Yeah, the run, man. Run हमको तो
वही.
Not only run. He has a fucking parrot, man. Parrot ball.
यारला खाता लाव.
हाँ?
यारला खाता लाव.
This guy also with the color, but
माझं तीन कलर बघा
माझा green color रे. ए green color.
compromise करता हूँ तो विराज had a run.
रान आला रान.
पहिला जाणार म्हणजे
ஒரு தடவை இதாச்சுனாக்கா மகா சாட்டுக்கு அவனுக்கு அது மாதிரி இல்லைன்ட்டு அவன் அங்க இருக்கான் அவன் வீட்டுல அவங்க வீட்டுல அது மாதிரி எல்லாருக்கும் ப்ராப்ளம் இருந்துச்சுன்னா இருக்கும். ஹலோ, இல்ல அது நின்னு கட்டாய் கட்டாய் வருது, அங்கேயே ப்ராப்ளமா இல்ல எப்படி அது? இதோட பிரேக் ஆகி வருதா? ஆ, இது நெட்டு கொஞ்சம் ஸ்டேபிளா இல்லை இங்க, அதனால கொஞ்ச நேரம் நின்னு வருது. இது பேரு செக் பண்ணி இப்ப டிஸ்கனெக்ட் பண்ணிட்டு ஓகே அப்டேட் ஓகே மீதி பேர்லாம் வரலையா? Please log in with your full name and email ID to request an absence. யாருமே அட்டனன்ஸ் போடவே இல்லை. ஆ ஆ செட்டிங்ஸ்ல பாருங்க. இதுல குரோம்ல கூட அட்டன் பண்ணிக்கலாம். அந்த ஆப்ல அப்டேட் ஆச்சுல ப்ராப்ளம். ஆப்ல இருக்கு. அப்டேட் அப்டேட் ஆகுது. வச்சு பார்க்குறேன்ப்பா.
ஃபோன் ஒர்க் கட்டாகவே ஐஃபோன் லேப்டாப்ல ப்ராப்ளம்.
இடத்துல பார்க்கலாம் ஒரு இடத்துல. எப்படி அது இது பண்றது?
பாஸ்வேர்டு Okay.
The round of messages are message that जो भी लोग नहीं आ रहे जैसे रक्षा है या Yeah, off on it. Scene reaches my back. So there's only one person, right?
थोड़ा सा इंसिस्ट कीजिए अनसीन को असीम सर को आएंगे
ठीक है.
बस कोई भी हाँ he was saying yes only but it would if you call ये कहीं की लास्ट मीटिंग भी मिस
Sir, shall I start?
Yeah, go ahead, madam.
Okay, sir. Namaskar and good evening to each one of you connected to this webinar. Respected Mr. Yogesh P. Chatwani, sir, our speaker today, members of AVP, other esteemed participating registered valuers, and my colleagues. Ajay Gupta, manager at DJPF RView, and coordinator to the CEP, extend a warm welcome to you all on behalf of my organization. As you are aware, topic of today's webinar is valuation opportunities for RVs in alternate investment funds. Like any professionals, valuers look for more valuation assignments for them. AIF is a new area which has opened door for newer valuation opportunities for valuers. The subject will discuss in details about our speaker. By our speakers. Just to brief introduce it, I wish to state that alternate investment fund is a special investment category that differs from conventional investment instruments. Private equity or venture capital, hedge funds, real property, commodities, and tangible assets are all examples of alternate investment. AIFs are required to adhere to a specific valuation norms based on the type of securities they hold. Thus, they are exciting scope for valuers for valuation assignments. This is a new area and it has its rules and guidelines. Hence, RV must have necessary knowledge of these laws and procedures and requirements for these valuations. Considering the importance of subject, we have selected it for CEP. We are sure that it will be useful to you all in their professional practices. The speaker on this subject today is Mr. Yogesh B. Chatwani, sir. He is an accomplished practicing professional with very high qualification. He is BCom, AMCom, ICWA, CPA, USA. He is a registered valuer and an insurance professional. He has working experience of over 38 years in IOC Amharat and Fortune 500 companies and India's second major board. He has niche knowledge of indirect taxation, criminal processes, office automation that includes SAP and MS Office. Presently, he is a practicing cost and management accountant and advisor for complex issues related to indirect taxes. He is a registered valuer for securities and financial asset and an insurance professional. With over 38 years of professional experience together with high academic qualification, Mr. Yogesh V. Chatwani sir is a very well respected professional and teacher. It is going to be an interesting learning session for you all for next 2 hours. So over to you, sir. Thank you.
So thank you, Kajal madam, for this introduction. And good afternoon to each one of you. Happy afternoon to each one of you. So once again, I am getting this opportunity to meet you all through this virtual session. And we are celebrating the festival of Navratri. So my festive greeting to each one of you. And what we are going to discuss today, that is the topic of alternate investment fund. So actually, as Kajal madam informed us, a topic of alternate investment fund or the avenues of alternate investment fund, then that we may not come across in our routine professional life because the opportunity to make investment in alternate investment that is available to the high net worth individuals or the institutional financial institute like pension funds or insurance funds, etc. So actually that is involving a very high values, and that is apart from the traditional investment opportunity. In a traditional investment, as we all are aware, whether we are investing in a equity share of a company or fixed income security, the what investor is getting, that appreciation is if we actually adjust that nominal investment, not investment return, nominal investment return with the inflation. So probably the real return on those investment, that is a very minimal. High net worth individual, they actually always look for alpha, creation of alpha. So alpha is nothing but the excess return apart from what is actually received on the traditional investment opportunity. So they are actually ready to take risk, but what they require is a higher rate of return as compared to the traditional investment opportunity. As you all may be aware, SEBI has notified alternate investment fund regulation, and that is notified for in 2012, but from 2012 till 2023, the valuation of alternate investment fund that was mainly done by the merchant banker, SEBI approved a merchant banker. So merchant banker, not only they were instrumental in getting registration for the alternative investment fund with SEBI, but they were also doing the evaluation of that. So in a way, there was conflict of interest, and that was pointed out by many stakeholders from time to time. And because of that, in the recent past, so just 3 to 4 months back, as you all may be aware, SEBI has now amended the SEBI Alternate Investment Fund. And by that amendment, by virtue of that amendment, now registered valuer with IBBI or under the Companies Act, they also will get or recognized as the valuer. So a valuation of AIF or alternate investment fund, that can now be done by the registered valuer, and the merchant bankers, they no longer can do the valuation of alternate investment fund. So if you have any networking with the merchant banker, or you have the networking with the fund managers of the alternative investment funds, so you will get opportunity for evaluation. And these valuation opportunities are recurring in nature. So alternative investment fund, as you all may be aware, either that are close-ended fund or open-ended fund. So for open-ended fund, the alternate investment fund manager will require valuation every month. And for close-ended fund, it is mandatory to get a valuation of investment made by the AIF on a quarterly basis. So plenty of opportunities of valuation is there, provided you have the networking, either with the merchant banker who are handling the AIF or with the fund manager. So that we will actually go through, and that is how actually our today's topic. Maybe not a routine topic, maybe actually a somewhat different, but valuer, it is always come across many challenges. One of them is evaluation of AIF. So in next 120 minutes or so, we will actually try to go through it, whatever best actually possible of this subject, which is having very wide coverage. So that is about our today's topic. So, Mahendra Kumar sir, may I request, please mute sir, if you are not talking. May I request all the participants, please mute whenever you are not talking. If you have any question, you can unmute and ask your question, but please mute whenever you are not talking. So, just allow me, I will take just 1 minute. Agrawal sir, any questions sir?
Good morning, good evening, sir. I just
Yes,
wanted
sir.
to know, please elaborate that this alternate investment funds valuation, is it good for land and building values also, or is it only for asset value?
So depending upon the investment made by AIF, see there are many avenues for investment by IIF. So AIF can also invest in a real property. So whenever investment of AIF is there in a real property, what are the categories of real property that will be part of my PPT? We will cover that. But naturally, when investment is in real property, that will certainly require valuation from the specialized professional valuer. So that is about that. Any further questions, sir?
Thank you, sir. Thank you.
Thank you. Thank you. So allow me to share my PPT. I will just take 1 minute. So I hope my PPT is visible to each one of you. If you face any issue in visibility of my PPT, just inform me anytime. And we all are professional, so let us make this session as knowledge sharing session. So if you intend to share any knowledge from your experience on this particular topic, you are welcome to do so. At the same time, if you have any question related to this topic, you may interrupt me anytime and ask your question. So a knowledge sharing session and interactive session, these are very useful. We all learn from each other daily basis. So that should be our motto, to learn from each other. And this type of program, a CEP program, that will provide us an opportunity to actually get value addition. So alternate investment fund, exploring the valuation opportunity, that is the title of our today's session. And this is the proposed coverage of that. So we will start with the preliminary, then we will go to the regulatory provision related to AIF. Regulatory means here regulator is the SEBI, Securities and Exchange Board of India. So a regulatory provision related to AIF, a regulatory provision related to valuation, including recent amendment, then fund structure, and a brief on taxability of AIF. So that will be actually the coverage. We will start with certain numbers. So it is very important to know how many AIF are functioning in India today. So these are the numbers of SEBI registered AIF. So in India, what is done actually under a SEBI regulation, alternate investment fund, these are divided into 3 categories. Category 1, category 2, and category 3. So these actually chart will give you an idea exactly how many alternate investment fund are registered in India. So if you go through the category 1 fund will be related to infrastructure fund. So infrastructure fund will make investment in infrastructure project, high value infrastructure project, and that can be both public and private projects also. So joint investment by government and a private company. So that is infrastructure fund. Social venture fund. So as you all may be aware, actually in July 2022, SEBI has amended 4 of its regulation, ICDR and all. By virtue of that, actually now social concept of social auditor in India that is recognized, and actually now social enterprises, they can get registration on the stock exchanges, NSE and BSE, National Stock Exchange and Bombay Stock Exchange. They have created a separate board for a registration or a listing of social enterprises. So they will get social enterprises, they get funding from the social venture fund, and the objective, normally the objective of commercial company or a commercial organization, that will be to earn profit. But social venture fund, they make investment. They make investment in those funds which create impact, for a society at large. So purpose of a social venture fund, that is not to earn actually a profit, but that is to actually help the society at large. And they make, we are living, actually, as we all are aware, we are living in the era of climate change. So in that, actually, protection of environment, that is very important. So social venture fund, they actually not only make investment in a project related to ESG, environmental concern, but they also make investment in projects relating to upliftment of the weaker section of the society. So that is the function of social venture fund. Venture capital fund, you all may be aware about that. They mainly invest in a startup company. You must have actually gone through the program on a Sony TV, Shark India. So that is a venture capitalist, and they make investment in mainly in a startup of entities. Then a small and medium enterprises fund, special situation fund. Special situation fund, they make one of the example, if I give, they make investment in companies under distress. So means when a company is under a distress, now as we all are aware, in India, IPC is implemented from 1st of December 2016. So this special situation fund, they can become a resolution applicant. So they can actually invest in a financially distressed firm. Apart from that, they continuously actually see for the opportunity wherever some special situation is there. So these are the funds under category 1, and then we have category 2 and category 3. So as you can see, in India, around 885 funds were registered with SEBI as at 31st of March 2022, and that number is continuously increasing now. So now, as per the latest figure, as on March 31st, 2023, there are around 1,088 or around 11,000 SME or AIF which are registered. And this is the category-wise investment by AIF. So how actually investments are made by the AIF. So as infrastructure fund, that is actually having the highest. Means process of AIF, that is investor will make first the commitment. So it is not that the entire fund will be invested in the beginning. So supposing a particular investor in AIF is making a commitment to invest 200 crore. So it is not that entire 200 crore he will give in the initiation. So that commitment he will make, and then based on the investment opportunities available, the fund manager will raise the fund, and after raising it, fund manager will invest the fund appropriately or in appropriate project. So there are 3 categories you can see here. Commitment raised, so that is the commitment made by investor to invest in the fund. Then a fund raised out of commitment, about a fund have been already raised by the fund manager, and out of fund raise, about investment is made by the fund manager. So that is reflected here, and as you can see, this will reflect the picture as on 31st of March 2022. the commitment made by the investor in AIF, that is to the tune of around 53,374 crore, and that has gone up to around 58,929 crore in as at March 31st, 2023, out of which around 28,000 crore fund have already been raised, and out of 28 crore, 24 crore has already been invested. So that is relating to category 1. And if you go through same number in category 2, so that numbers are 5,19,189 crore as at 31st of March 2022, which has gone up to around 693 crore in 2023. And total of category 1, category 2, and category 3. So what is category 1, category 2, and category 3? That we will understand. But as you can see, the investment or a commitment that is around 8,33,000. So very big number, 8,33,000 crore rupees. That is the commitment made, out of which 3,65,000 already raised by the fund manager, and out of 3,65,000, around 337 crore that has already been invested. So that will give you an idea about the valuation opportunities available in this particular area. And this is the instrument-wise deployment of fund. This in a previous slide we have seen this 3,37,982 crore that is already invested by the fund manager. So where these funds have been invested, that idea you can get from this. So actually, AIF, they mainly invest in unlisted equity share or equity linked instrument or limited liability partnership interest. So that is around a 41.4% of the total investment made, or around 1,40,000 crore. And then a listed equity share, that is around 66,000 crore. Debt and security, that is around 94,000 crore. And total that will be around 3,37,000 crore. So this is how they make the investment. Moving forward, so this is sector-wise deployment of the funds by AIF. So how actually they make investment. So in actually, as you can see, real estate sector, that is around 20%. Then IT and IT technology, financial services, non-banking financial companies, bank, pharmaceutical, FMCG. So almost all are covered, and majority of is there to other sector. So that is the sector-wise deployment of fund by AIF, and these are the alternative investment fund which are registered in a GIFT city, GIFT IFSC, Gandhinagar. So as you all are aware, in Gandhinagar, a GIFT city IFSC, that is going to be the number 1 in the world, the finance service providers. So that is actually developing in a very high speed now. That is actually picking up the pace. So in that actually they have created ACJ. So there's a ocean of opportunities are available for a professional in the gift city. If we take one example in actually the maritime cluster, which is created in ACZ of Gift City, Gandhinagar. So there all types of activities are carried out. Actually, either to registration of ship was not done in India. So that is done in India now. Either to the leasing of ships, that transaction were not taken up in India. So now it is possible in Gift City. And a gift city is ACZ, that is having a special economic zone. And as you all may be aware, ACZ are treated as deemed foreign territory. So that actually will provide many tax concession to the investor in a gift city. So because of that, the number of AIF in gift city Gandhinagar, that is also increasing at a very, very rapid speed. And from this, you will come to know. There are around 24 funds as at 31st of March 2022. But Gift City actually is developing from last 2-3 years only. A development phase has taken up from last 2-3 years only. So going forward, that will actually increase, and a fund size actually corpus available with the AIF in Gift City, that is to the tune of around 5,153 million US dollar. So that will actually again give you an idea about how big this valuation opportunities are available to be a registered valuer. And these are the plans for investor for allocation of alternative by 2025. So more and more investors are looking for investment in alternative investment. So in India, we do not have a concept in India so far. The investment in AIF that can be made only by high net worth individuals or the accredited investor. But in a foreign country, developed country like USA and a European country, they have a concept of liquid alternate. Liquid alternate means the retail investor, they can actually invest in fraction of a unit of the alternative investment fund, fraction of the units which are issued by the AIF. So that concept today or tomorrow that will come in India also, and by that actually the participation of the retail investor in India in AIF, that will also go up. So that is thing of the future, not at present in India, but in European countries or many developed countries like Singapore and USA and all. So that concept is already there. So this will give you investor plan for allocation to the alternative by 2025. And this I have taken from the world renowned firm. So that is a source of this, as you can see, that is a Preqin investor survey. So that is a hedge fund, and that is a very private equity firm. So that is very renowned world over. You can visit the website of this and you will get an idea. So actually, means going by finding of this survey, so by 2025, the allocation of investor in alternate investment that is expected to go up, and that is what is informed by around 55% of the respondent to this survey, and around 26 they believe that that will increase significantly. So that is what the prospect of alternative investment fund, and this is the funds under management. So what we have seen in India, but in a global actually, as you can see, the alternate investment funds, they invest in private equity, private debt, hedge fund, real estate, infrastructure project, natural resources. So this will actually give you an idea about how much investment is made by the alternate investment fund, and different sources of that. And these are the figures of asset under management, already under management. And these figures are in trillion US dollar, in trillion US dollar. So that will actually give you an idea how much assets are under management with AIF the world over. So that is very important. And this is absolute alternative investment asset growth, that is asset under management growth between 2021 and 2026. So as you can see, Asia Pacific region that is also expected to go by 100% between 2021 and 2026. So in next 5 years, in Asia Pacific region, which will include India also, that is expected to go up by around 100%. And apart from that, in European country, in North America, so that is actually everywhere. You can see there is a means increase, prospect of increase are visible from this particular chart. So these are the traditional investment. So these are the traditional investment in which we make investment routinely. So that is fixed income security, equity, mutual fund, a derivative, real estate, commodity, money market instrument, a money market instrument having original maturity period of less than 1 year, like a treasury bill or commercial papers and all. So these are the avenues available for a traditional investment, and we all are familiar with that. So we will not go into a detail of this, but what is alternative investment? So that why actually investment in alternative investment is required. So that we will actually cover here. So AIF that will provide an opportunity to diversify the investment portfolio. So supposing you are investing in a mutual fund, so mutual fund actually investment will be predefined. Many mutual fund will invest only in large cap fund, or many mutual fund that will actually invest in a small cap fund. So depending upon the objective of a mutual fund, the investment will be done, and that will actually not provide opportunity for a diversification, but AIF will actually give that opportunity. So opportunity to diversify the investment portfolio beyond traditional asset classes like stock and bond, and they will provide exposure to a wide range of alternative asset like private equity, hedge fund, real estate, commodities, and many more. So as Kajal madam listed out, these are the avenues, and we will go into detail of that. An alternative investment that will frequently have the potential for higher return compared to the traditional investment. So that is how actually investment by high net individuals, or by the institution like a pension fund or insurance fund, they make investment in alternative investment. So this will allow access to investment opportunity that may generate attractive risk-adjusted return, particularly in sector or strategy that are not easily accessible through the traditional investment vehicle. So that is alternative investment fund that can help to manage the risk by spreading investment across different asset classes. So investment will not be limited to just one asset class like equity share or fixed income security. That can be spread to different asset class like a private equity or hedge fund or real estate or commodity. So that are the avenues available. We will go through that in more detail, and that diversification can potentially reduce their impact of market volatility and economic downturn on the overall portfolio. So AIF, these are managed by professional fund manager, and the remuneration or the professional fees that is paid to the fund manager of AIF, that is very, very high, probably in crores of rupees, because not the general ratio of fee, that is a 2 by 22 or a 2 by 20 or a 1 by 10. So a 2% of the committed capital by the investor in AIF, that is the management fee, and a 20% that is actually incentive fee. So actually whatever returns are earned by the fund manager, on that 20% will go to the fund manager. So that is the type of fees which is paid to the fund manager. If you compare that with the portfolio manager incentive to the portfolio manager, or the mutual fund manager, that is very, very low. And that actually AIF, because that will require a specialized type of knowledge in private equity or hedge fund and all. So they actually nominate a professional fund manager, and the returns to fund manager also will be very, very high. So that is AIF are managed by professional fund manager who possess specialized knowledge and experience in specific alternative investment classes like private equity or hedge fund, etc. An investor can benefit from their expertise as a fund manager conduct in-depth research and analysis to identify promising investment opportunities. So that is what is AIF do. If I give you one example, supposing there is actually a proposal for a merger of a company or a proposal for issuance of right issue of a share of a company. What a fund manager do, they actually they determine the investment opportunity based on the exchange ratio in such transactions of merger and amalgamation, proposed merger and amalgamation. So that is just one example, and that will require a very specialized knowledge. And the fund manager, they continuously identify such investment opportunity. So going forward, AIF typically have a longer investment horizon. So what traditional investors look for a very shorter investment horizon, but this IIF, that is for a very longer investment horizon, 20 year, 10 year, 15 year, like that. And as compared to the traditional investment fund, and this longer term approach that will align well with certain alternative investment like private equity, real estate, which require time to generate return, and they may have limited liquidity. So one of the important characteristics of AIF, that is illiquidity. That instrument or security which are issued by AIF, these are not liquid in nature. Supposing we are investing in a listed means equity shares of a listed entity, we can actually sell it in stock exchanges the next day. But that type of opportunities are not available to the investors of AIF. These AIF are illiquid in nature, and AIF can be structured to cater to the specific investor preferences or the objective. So if we take example, as we have already discussed, there are many AIF that are focused on environmental or social or governance principle or impact investing, allowing investor to align their investment with their value. So that is alternative investment, and that can provide a hedge against the inflation, market downturn. Certain asset classes like commodity or real estate that have historically shown a resilience during periods of economic uncertainty, offering a potential protection to the investor portfolio. So as we all are aware, if there is a market volatility or uncertainty as it is there at present, so in these uncertain macroeconomic condition, you will find that there is no reduction in prices of real estate, or there is no reduction in prices of commodities, particularly the precious commodities like gold and silver. That actually, may I request each participant, please mute. So you must have noticed that in cases of unfavorable macroeconomic condition or a negative investment sentiment, there is value appreciation in a real estate or in a commodity market. So that is the possible hedge which is provided, and that is what is highlighted here. Certain asset classes like commodity or real estate that have historically shown a resilience during period of economic uncertainty, and that has provided potential protection to the investors' portfolio. And AIF, these are subject to regulatory framework that provide investor a protection and transparency, but a regulatory intervention that is very less as compared to the traditional investment like in mutual fund, because investment in mutual fund is done by the retail investor. The regulatory intervention is very high as compared to AIF, because AIF investment is made by the high net worth individual, and they are capable to understand the risk. So they actually are ready to take the risk, but against that they require the more return, higher return. So in finance, we all are familiar with the two important concepts. no risk, no gain. So more the risk you take, more the gain you will have, and a time value of money. So these are a very important factor which we consider in finance or in valuation. So that is what is highlighted here. And these are the key features of alternative investment. So number one, diversification. So alternative investment fund that can help to spread risk in a portfolio, because they frequently have a low correlation with traditional investment like stocks and bond, and that can reduce the overall portfolio risk. Then a limited liquidity, we discussed about that. Once you make investment in alternative investment fund, you will actually have a very lower level of liquidity. Many alternative investment fund, these are less liquid than the stock or a bond, meaning they may not be easily bought or sold in public exchanges. And if you take example, so investment in private equity or real estate or a certain hedge fund that is not publicly available, mainly actually the investment in AIF, that is through a private investment channel, that is not a public actually. So they what they issue is a PPA, private prospectus, and based on that actually investments are made. Higher potential return. So when more risk is taken, so that will give the more return also. So some alternative investment have a potential for higher return compared to traditional asset. Private equity, venture capital investment, they can yield a substantial gain if successful. Complexity, so alternative investment fund can be more complex, and that may require specialized knowledge to evaluate and manage effectively. So complex alternative include derivative and a structured product. Regulatory oversight, so that is that can be different from those governing a traditional investment, like hedge fund and private equity fund may have fewer regulatory requirements. So what the fund manager of AIF that he require complete independence. So there is no regulatory interference, or even if it is there, that is at very minimal level. So that will give the flexibility, that will give the opportunities for the fund manager of AIF to explore the profitable opportunity of investor. Then actually risk and volatility, AIF will always have high risk and volatility that can come with higher risk and volatility, especially sector like commodity, cryptocurrency, distressed debt, and investor should prepare for the potential for a significant price fluctuation. Hedge against inflation, we discussed about that. Investment minimums, so many investment require higher minimum investor as compared to traditional asset. So in India, going by the guidance provided in a SEBI regulation, if we actually intend to invest in AIF, minimum investment is 2 crore. So that 2 crore actually many retail investor that will be out of reach of the retail investor, and to get accreditation as under the SEBI AIF regulation, the minimum worth that is required is around 5 crore rupees. So that actually will drive the retail investor out of AIF actually. Then a portfolio allocation, so properly incorporating alternative investment into portfolio, that will require careful consideration of investors' risk and tolerance. So these are the features of alternative investment fund, and these are the common types of alternative investment opportunity. Private equity, so private equity that is shares of unlisted entity or the private company. So actually many fund manager, they prefer to make investment in a private company rather than actually making investment in public company. What they do actually, they make investment a substantial amount, and that will actually give the control over a management of that company, or the management of that company will be with the private equity investors. So that is means private equity investment. Then real estate. So real estate, we will go into detail. There are many avenues in investment in a real estate. Hedge fund investment. So what is hedge fund? We will also go through that in a brief. Commodity investment like crude oil or precious metal, gold, silver, diamonds, etc. Then venture capital. So venture capitalists, they mainly invest in startup entity. So that is a venture capital. Now actually we can go into detail of all this, but you will appreciate that in a session of 2 hours. It is not feasible to go into a detail, and what we are going to cover, that is a very brief, actually very a brief detail. So that is venture capital, a private debt. So mainly the fund manager give a debt to the private company, so that we consider as a private debt. Then IIF fund manager also invest in art and collectible. So that is another source of investment. Then a structured product. So many time actually the investment is structured according to the need of investor. So that is structured investor. Then cryptocurrency, digital asset, as we all are aware, the investment and how much actually is the value of digital asset or cryptocurrency. So largely it is done by the AIF, Alternative Investment Fund Manager. Then impact investing, so that is relating to investment in social enterprises. So impact investing is not about getting the return. There are many investors who actually make investment for a public good, for to uplift the weaker section of the society. So that is impact investing. What they actually intent is to create impact on a society. That is how that is called as impact investing. De-stress debt. So they actually make investment in a de-stress company, a financially a de-stress company. So that is a de-stress debt. And a film and entertainment. So there are many AIF who make investment in a film and entertainment projects or in such a company. So these are the common types of alternative investment, and this list is not exhaustive. This list is illustrative in nature, and there are many other types of investment avenue which are available to the alternative investment. So these are the methods of investing in AIF. How an investor can make investment in AIF. So majorly, that is three types of methods which are available. Number one, direct investing. Number two, fund investing, and number three, co-investing. So direct investing, that is investment made by the investor directly. So a high net worth individual, they will have their own team of professional, and that professional will continuously look for the investment opportunity. And instead of relying on a fund manager, what they will do, they will make the direct investment. So direct investment, you will appreciate that will require a professional team, specialized knowledge, and a due diligence of the project. So that is a very tactful work. So direct investment will involve individual or entity directly investing in alternative asset without the use of intermediary. So actually pension fund, insurance fund, they have a very high amount of corpus which is available for investment, and they will actually deploy their own team of professional to ascertain the investment opportunity in AIF, and that team will do the work in-house. So that is direct investing. An investor will have a full control and a decision-making authority over their investment, and a common that is in a real estate or private equity, venture capital, private debt. The direct investing will be in these type of investment. Then we have a fund investing. Fund investing means investment in AIF through a fund. So there a fund manager will decide exactly where to invest in their prospectus or in the objective of firm. They will highlight the based on the investment opportunity. The fund manager will broadly invest in such and such AIF, but that again can be changed because here a fund manager will have a full flexibility. So investor will allocate capital to AIF, alternative investment fund, which are managed by professional fund manager, and fund manager will make investment decision on behalf of the investor, providing diversification and expertise. And investor in AIF will share both potential return and risk. And a value various AIF category like hedge fund, private equity fund, real estate fund fall under these methods. So that is fund investing. Then a co-investing. Co-investing, a part of the fund will be by the investor will be actually invested through AIF, and part of that will be invested independently. So what happens here, the investor who is having a very large corpus, supposing of 500 crore. So out of 500 crore, the investor will invest 100 crore through a fund, and it will be actually means investor will reach a understanding with the fund manager. Okay, whatever a fund you are going to invest, I will also make investment in that company independently. So that in that what will happen, indirectly the investor will use the expertise of the fund manager. So a process of due diligence will be made by the fund manager, and part of that investor will invest through the fund manager, and part of that independent. So by that, what investor will achieve, because as we have discussed, the professional fee of the fund manager that is very, very high. So at least the investor will save the outgo on account of professional fee on a part investment. So that is the purpose of co-investing. So co-investing will involve investor participating alongside a fund investment in a specified asset, and that will allow investor to have direct exposure to a particular investment while benefiting from the fund's expertise and resources. So everything will be decided by the fund manager. So investor will make a part investment through fund and part investment directly. And common that is common in a private equity and a real estate fund. So actually, a company, private company, is needing say investment of 500 crore. So 100 crore will come through the fund AIF, and remaining 400 crore that may actually happen through by mode of co-investing. So for HNI, they may invest in that fund 100 crore each. So that is a process of co-investing. Then we have funds of fund. So funds of fund actually not only invest in a one type of AIF, funds of fund actually will make investment in multiple AIF, and that will actually give a proper diversification. So that is fund of fund. But instead of one a fund manager, fund of fund will have multiple fund manager. So naturally, when there are multiple fund manager, so professional fee which need to be paid by the investor, amount of that will be a very, very high. So that is a funds of fund. So that investment in a multiple AIF rather than directly in underlying asset, and that will provide diversification by spreading investment across multiple fund. each specializing in a different alternative strategy, and that will reduce the need for investor to research and select individual AIF. So that is about method of investing. These are the key characteristics of a private equity investment. Private equity means investment in a private firm. So that will have illiquidity. So private investing, a private fund, shares of private. So shares of private companies that cannot be sold on exchanges. So that is not publicly traded shares. So because of that liquidity, that will be a very minimum. So illiquidity is the prime characteristic of the private equity. Apart from that, long-term horizon. So generally, actually, investment by investment in private equity that is made in the startup entity or or the companies which are actually in a developing stage, initial stage, or at the time of inception of a private company. So that will actually the return will come only when that company is established. So very long term horizon, time horizon will be required in order to get the return. Then active involvement of the investor will be there. Fund manager, supposing they are investing in a private equity, so they will take part in management of the company, day-to-day affairs of the company. Generally, when we make investment in a publicly traded company, shareholder will not get opportunity to participate in a day-to-day affairs of the company. But when investment is made by AIF, fund manager in private equity, the fund manager will get opportunity to get involved in a day-to-day affairs of the private company. So that will give a management right, then a capital injection, leverage. So that is again a very important for investment in a private equity. The fund manager may get opportunity of leverage, diversification, risk and return, exit strategy. So exit strategy from a private equity, these are multiple by way of IPO. So when a company, private company is established, so at the time of IPO, the existing private equity investor will get the opportunity of exit. Then that trade sale can happen. Trade sale means selling the a company to the competitor of that company. So there are many types of exit strategy. So these are actually high minimum investment, regulatory oversight, sector specialization. All these are key characteristics of a private equity. And this is the classification of real estate investment. So natural resources investment. So that is number one. Real estate investment can be made in natural resources. Many of these actually in India we may not be familiar a bit. In a foreign country, this type of investment is very common actually. So investment in a timberland. So investment in forest and timber resources, which can involve harvesting and selling timber, or using land for other purpose like conservation and all. So nowadays, actually, what is happening in a developed country, the alternate investment fund, they make investment in a timberland, and what they do, instead of cutting the timber and selling in the market, they preserve the forest, and against that, what they get is the carbon credit. And that carbon credit, as we all are aware, that is actually tradable in the market, because many companies who are creating pollution, they will require a certain carbon credit to meet the environmental norms. So in that, actually investment in a timberland, that will become a very profitable. Whoever has invested in a timberland, so not only they are contributing to the protection of environment, but they are getting appropriate return on that. So that is the concept prevailing in the developed country, preserving the timberland, and along with that getting a return by actually selling the carbon credit. So agricultural land, so investment in farmland for crop cultivation, livestock farming, and other agricultural investing. Then mineral rights and mining, so investment in land or a mineral right for the extraction and a sale of a valuable mineral or resources like coal, oil, and natural gas. So that is actually at the time of auction by government, this large investor make investment in mines, coal mines, or a various type of mineral or means oil wells and all. So that is mineral rights and mining. And water right, investment in water right or access to water sources, particularly in regions where water is a valuable and a limited resource. So this is a natural resource investment, which is part of real estate investment. Then we can have infrastructure investment, which is also part of a real estate investment. So under infrastructure investment, a transportation infrastructure, so investment in infrastructure asset like airport, toll road, bridge, and port. Then utilities, so investment in essential utility like water treatment plant, power generation facility, and a distribution network. Then energy infrastructure, so investment in energy related infrastructure like pipeline, oil and gas storage facility, renewable energy project. Social infrastructure, so that is investment in facility like that's how a social need like school, hospital, a government building. So that is a classification of real estate. Number two, infrastructure investment. So natural resource investment, infrastructure investment. Then a third type of investment is in real estate development and management. So residential development, so many AIF, they invest in large residential project. So investment in a development of housing, including a single family home, multi-family apartment complex, and condominiums. So that is residential development. Then commercial development, investment in construction of commercial property like office building, shopping center, and industrial warehouses. And a property management, so investment in property management company who are responsible in overseeing and maintaining the real estate asset. So that is about the development, real estate development and management. Then a specialized real estate investment, so that is data center. So investment in a facility that house data servers and technology infrastructure crucial for a data storage and processing. Healthcare and real estate, investment in property like hospital, medical offices, senior living facility, etc. Senior citizen living facilities. As we all are aware, that concept is also becoming a very wide coverage. Then hospitality and leisure, investment in hotel, resort, leisure related property, golf courses, entertainment and entertainment complex. Entertainment venue, investment in venues for sport, theater, and other forms. So these are the investment opportunities in real estate. Then environmental and sustainable investment, so green and sustainable real estate, investment that focus on environmentally friendly and energy efficient real estate. Conservation investment, so that is land and property for conservation and ecological preservation. So all these type of investment are made by the investor in AIF. This is just to give a rough idea how actually funds in AIF that is invested. And these are the types of real estate AIF. So a real estate private equity fund. So that fund typically will invest in property with the goal of enhancing their value through strategic improvement and efficient management. Like that, we can have real estate income fund, a real estate development fund, real estate debt fund, a real estate crowdfunding AIF. So in India, that concept of crowdfunding is not so popular, but in a foreign country, they have a concept of crowdfunding. And in India, going forward, that may become possible. Now also, at present also, there are a certain company which are providing opportunity for fraction investment in a real estate project, commercial project, and a residential project. So if you surf on internet, you will come across details of such company. So crowdfunding, that is also a popular concept of getting a fund. Then a real estate investment trust, REIT. So we, as you all are aware, there are a separate SEBI regulation for REIT, for monitoring of REIT, a real estate investment trust, and then a real estate funds of fund. So all these are different types of real estate AIF. And hedge fund, so this is again a very important one of the avenues in AIF, that is hedge fund. So hedge fund, that is investment vehicle that pulls fund from investor and employ in a various strategy to generate the high return. And hedge fund typically are privately managed, and these are open to institutional investor like investment insurance fund or a pension fund, etc. And accredited individual. So in under a SEBI AIF regulation, they have a concept of accredited investor. For that, actually very high net worth will be required, and a minimum investment, as I told you, that is a net worth of around 5 crore and a minimum investment of 2 crore. So that will actually give the status of accredited investor under the SEBI AIF regulation. And these hedge fund, they aim to generate positive return in various market conditions, including both rising and falling market. And hedge fund have more flexibility compared to traditional investment fund in terms of investment strategy, asset class, risk management technique. So as we discussed, supposing it is a portfolio management or a mutual fund, so manager of that don't get flexibility in making investment, but that is actually available in hedge fund. So that is brief about the hedge fund. And all these details, actually all these topics are having a very wide coverage. And since it is 2 hours, our prime interest is to look how actually a registered valuer will get the opportunity of valuation. So we will go to that now, and these are the evaluation challenges in AIF. So if time permits, we will come to this, and we will start with now a regulatory provisions. So as we discussed, SEBI in 2012 has notified the SEBI AIF regulation. So what is the meaning of AIF as per SEBI AIF regulation? So alternative investment fund, that means any fund which are established or incorporated in India in the form of a trust. So actually majority of the AIF which are established in the India, that is as trust, because trust, as we all are aware, many tax incentives are available to the trust. So trust investing, that is a prominent way of investing in AIF in India, but in other country, they don't create trust. They either create a limited liability partnership or a company. So all these avenues are available. So AIF can be registered or formed as a trust or a company or a limited liability partnership or a body corporate, which is a privately pooled investment. So that is very important. Privately pooled investment. So investment in AIF that cannot be made through a public issue, IPO in initial public offer, or FPO, further a public offer. So first condition is a privately pooled investment vehicle which will collect fund from investor, whether Indian or a foreign, for investing it in accordance with a defined investment policy for the benefit of its investor. So that will not covered under a SEBI mutual fund regulation, a SEBI collective investment scheme, or any other regulation of the board. So whatever covered under mutual fund, that will not fall part of the AIF. And these are actually will not be considered as AIF. So family trust or ESOP trust, employee stock option trust, or employee welfare trust, or gratuity trust. So all this will not be considered as AIF, going by guidance provided in SEBI AIF regulation. Holding company, so that will be as per section 2 of Companies Act, and other special purpose vehicle are not established by fund manager, including a securitization trust regulated under a specific regulatory framework. So as we all are aware, under a SURFACE Act, the the means the securitization company that are registered with the Reserve Bank of India. So that is not covered under the AIF. And a fund managed by a securitization company or a reconstruction company that is registered with the Reserve Bank of India under Section 3, that is not actually part of AIF regulation. So that is about the meaning of AIF. Now, actually, these are the three categories of AIF. So, AIF investment fund in India, that is divided into three categories. We have category 1, category 2, and category 3. So, what is category 1? So, these are closed-ended fund. So, these are not open-ended fund. Category 1, closed-ended fund, and that will have a minimum tenure of 3 years, and investing in ventures that are ideally considered as economically desirable. So category 1 AIF, they will invest in such ventures which are beneficial to the country at large, economically beneficial to India. And because of that, government has provided many tax concessions to category 1 AIF. So that is category 1. Category 2 are a closed-ended fund, and that will have a minimum tenure of 3 years, which do not fall under the category 1 and 2. So category 2 is residual in nature, whichever funds are not falling under category 1 and category 3, that will be known as category 2 fund. We will actually see in more detail about this. And category 3, these are either open-ended or closed-ended fund. So category 1 and 2 necessarily there needs to be closed-ended fund. So tenure of these type of fund are predefined, and that cannot remain open in perpetuity or indefinitely. But the category 3 fund, that can be established either as open-ended or as a closed-ended fund, and that will employ diverse and complex trading strategy with a view to gain a short-term return. So that is three categories of AIF. And which are the fund covered under category 1? Category 1 will have a venture capital fund, angel fund. So a venture capital fund, actually, as we all are aware, they make investment in a startup entity mainly, or angel fund. So government of India also encourage startups, as we all are aware, and that will actually create, that is development of a startup is beneficial for the economy of India. So that is actually government has provided, because of that, many tax concession to category 1 alternative investment fund. So category 1 will have a venture capital fund, angel fund, infrastructure fund, social venture fund, and a situation specific fund. So all these are in category 1. Category 2 will have debt fund, private equity fund, a funds of fund, private debt fund, private equity fund, and a funds of fund. So what is meaning of that, we covered in brief in the beginning. And category 3 will have a hedge fund, and a private investment in a private equity fund. So that is private investment in a private equity fund. So that will be done by the category 3. So these are the 3 categories: category 1, category 2, and category 3. What is the meaning of category 1? So that invest in a startup or early stage venture or a social venture or a small and medium enterprises or infrastructure or other sector or area which the government or a regulator consider as socially and economically desirable. So category 1 are those funds who make investment in such vehicle which are considered as socially and economically desirable. So which are the avenues in that? So that is startup entity, early stage venture, social venture, small and medium enterprises, infrastructure project, or other sector or area which government or regulator consider socially or economically desirable. So that is actually, that will include the venture capital fund, a small and medium enterprises fund, social impact fund, infrastructure fund, a special situation fund, and such other alternative investment. So here actually alternative investment fund which are generally perceived to have positive spillover effect on economy, and for which a board or government of India or other regulator in India might consider providing incentive or concession, tax concession, that shall be included, and such fund which are formed as a trust or company shall be considered as a venture company. So that is the meaning of category of 1 investment fund in a brief. Moving forward, category 2, so that will note as we discussed, category 2 funds. These are residual in nature, which is not covered in category 1 or 3. That will form part of category 2, mainly private debt fund, funds of fund, and private equity fund. So that does not fall in category 1 and 3, and which does not undertake leverage or borrowing. So that is the precondition. The alternative investment fund, they will not take the leverage. Leverage means they will invest whatever actually they have collected from the investor against that actually capital which is collected from the investor. They will not take the borrowing. So that is very important, a leverage or a borrowing. So alternative investment fund category 2, they are not permitted to take the leverage. A leverage by way of investment in a financial derivative instrument, or that can be in the form of borrowing from the banks or financial institution or any other such private entities. So category 2, they are not permitted to take leverage or borrowing other than to meet a day-to-day operational requirement and as permitted in this regulation. And here category 2, no specific incentive or concessions are given by the government or other regulator. So that is category 2. And category 3, most complex fund and most flexibility fund manager of category 3 will have. So that will employ diverse or complex trading strategy, and that may employ leverage. So actually category 3 fund that are permitted to employ the leverage. Leverage that will be created by a way of investing in a financial derivative instrument like forward contract, future contract, a swap contract, or option contract. So that leverage, but condition is that cannot be more than a 200% of the asset under a management. But actually a mutual fund, like they cannot actually borrow money for the purpose of investment, or they not they are not permitted to create the leverage or employ the leverage. But category 3 alternative investment fund, they are permitted to take a leverage, and that will give a more flexibility to the fund manager, and that will actually result many times if strategies of the fund manager goes right, which is the case in majority of the cases, because these are highly educated fund manager, highly experienced fund manager, and because of that, actually, the return from these type of fund are very substantial. So that category 3 will employ diverse or complex trading strategy and may employ leverage, including to investment in listed or unlisted derivative. So these actually alternative investment fund like hedge fund or funds of fund which trade with a view to make short-term return, or such other fund which are open-ended and for which no specific incentive or concessions are given. So these are the three categories I think we will cover, and these are the conditions. So this is regulation 10, who can make investment in AIF. So AIF can raise fund from any investor, including India or a foreign investor or non-residential Indian, and each of scheme of AIF that must have a minimum corpus of 20 crore rupees. So corpus of AIF that cannot be less than 20 crore rupees. But for a social impact fund or a social enterprises, that can be 5 crore rupees. And AIF that cannot accept investment of less than 1 crore rupees from an investor, an employee and a director of AIF, that is a minimum investment, that is a 25 lakh rupees. So minimum either 1 crore from actually investor, but that is relaxed to a 25 lakh. And accredited investor are exempt from this requirement. So that is a minimum investment by them is a very high. So that is about the condition related to investment, and a manager or sponsor of the AIF must have a continuing interest in fund, at least a 2.5%. What is continuing interest? In AIF, a fund manager will also make investment. It is not that because actually if a fund manager will only get professional fee, probably his stakes are not involved, and that will actually make the fund manager relax. So in AIF, it is imperative that not only investor but the fund manager will also make investment, and that we call it as the continuing interest. So continuing interest with the investor of AIF, and that should not be less than a 2%, at least a 2.5%, or a 5 crore rupees, whichever is lower, 2.5% of the corpus, or a minimum 5 crore. So that is the amount of investment fund manager will make along with the other investor. And for a category 3, that minimum investment is 5 crore or a 10 crore. So that is the carrying investment of the fund manager. So naturally, when a fund manager has invested his own 10 crore rupees, so he will make the efficient or effective investment decision. So that is about the condition. And the last line is very important. A fund can only solicit or collect fund through private placement. So that is how actually the public at large are not aware about the investment opportunity in AIF, because these funds are collected, number one, from the institution like pension fund or the insurance fund and all, or from the high net worth individual. And because of that, actually, many of a retail investor or a public at large, they may not be aware about the how actually AIF are managed. And this is the tenure and listing. So category 1 and 2, these are close-ended, and minimum actually that tenure of that will be determined at the time of application, and a minimum tenure of 3 years, category 3, either open-ended or close-ended. So from the perspective of valuation, this is very important, whether it is close-ended or open-ended fund, and that is about the tenure of the fund. Now, actually, we will go to the evaluation, which is very important. So, if we refer to regulation 23 of EIF regulation, so here, as per provisions of this particular regulation, so AIF must provide its investor with a description of its valuation, procedure, and methodology used to evaluate its asset. And category 1 and 2 AIF, these are required to have their investment valued at least once in every 6 years. And evaluation need to be conducted by an independent valuer who is appointed by the AIF and with the approval of at least 75% of investor by value of the investment. This valuation period may be extended to 1 year. So that is about investment opportunity in category 1 and 2. In category 3, that AIF must ensure that a calculation of the net asset value, that is NAV, is independent from the fund management function, and NAV must be disclosed to investor at interval not longer than a quarter for a close-ended fund and at interval not longer than 1 month for open-ended fund. So as I informed you in the beginning, in a category 3, which are more complex in nature, the registered valuer will get opportunity of making a valuation at least once in a month. And if it is a close-ended category 3 fund, so valuation will be required every quarter, every 3 months. And if it is related to category 1 and category 2, so their valuation will be needed at a gap of every 6 months, but that can be extended to 1 year. So that is the that is the actually valuation opportunity. Now, what is the role of independent valuer in valuation of asset held by the AIF? So, independent valuer primary role is to determine the fair value of asset held by the AIF, and they conduct thorough analysis and employ appropriate evaluation methodology to arrive at an independent, unbiased assessment of asset worth. So as you have seen, the investment by AIF, that is either in real estate or in commodity or in private equity or in hedge fund. So all these are very complex nature of investment. It is very convenient to make valuation of equity share of a publicly traded company, because pricing information of a publicly traded company is freely available on the stock exchanges, but you will appreciate that it is most complex to make valuation of a private company. So private company valuation will be based on a judgment of the valuer, and that will become highly subjective. Similarly, real estate investment, we have seen timberland, farmland investment, infrastructure project investment, all that valuation will be very complex in nature. So that is the role of independent valuer in evaluation of investment made by AIF. An independent valuer will ensure that a valuation process that will adhere to the applicable regulation, accounting standard, industry-based practices, and they will consider guideline and requirement which are set forth by a regulatory body like SEBI in order to ensure the proper evaluation procedure. An independent valuer will select and apply appropriate evaluation methodology for different types of asset which are held by AIF. Then they may use market-based approaches, income-based, asset-based. So these are the three approaches. So that is actually the role of independent valuer. An independent valuer may also play a role in ongoing and monitoring and a review of the valuation asset, because that is continuous in nature. Other assignment that is event based, each event or each situation a valuer will get. But here in AIF, once actually opportunity is given, so that will be continuous in nature. Every month or every 3 months or every 6 months, valuation will be needed afresh of the investment of AIF. So here the opportunities are ample, and that is recurring in nature. That is not a one-time opportunity of evaluation. So ongoing process, and that may actually periodically reassess the value of asset, particularly for illiquid or hard to value investment, to ensure that evaluation will remain accurate and up to date. So that is the role of independent evaluator. And now we will go to this circular, which is issued on 21st of June 2023 by the SEBI, and in that the concept of IBBI registered evaluator that is accepted. But before we do that, it is more than 90 minutes or nearly 90 minutes from when we started. So two things. Number one, if you have any question, probably at the end of the session, we may get less opportunity. So if you have any question on whatever we have covered so far, so questions are welcome. That is number one. And number two, if it is convenient, so we will have a short break of 5 minutes or so, because it is always advisable for health reason. We should not sit at one place continuously for a very longer duration. So to have a short walk, that is necessary to maintain our health. So we will have a small break of 5 minutes. But before we go into break, any question from your side? Any questions on whatever we have covered so far? So it seems no question. In that case, we will have a short break of around
Sir,
5
just 1
minutes. So
minute.
it is 5:30. Yeah, go
Sir,
ahead.
you were talking about the complexities of valuation. I think
Yeah.
we can discuss on that more as a valuer.
Okay, okay. So
When you
actually,
take
this
later on, maybe people may not be there now since we have taken a break.
okay.
So we
So
can take that.
afterwards, we will discuss that.
Yes,
So
yes, sir. Yes, sir.
certainly, sir. So we will resume this session after 5 minutes. It is 5:31. So around 5:36, we will resume the session. And I thank each one of you for your attention throughout this session. Thank you.
Sir, no conversation or dialogues are listened.
There is a break of 5 minutes. It is about to get over. You see, sir.
Okay, thank you.
Yeah. Okay.
So we will start now. I hope each one of you have joined. So prior to going to the break, Agrawal sir asked one specific question: how complex the valuation of AIF is. So we will take 2-3 examples. Supposing there is a category 3 AIF and that category 3 fund has invested in say 10 startup entity. Now you will appreciate that a startup entity will not have any historical record, and going by the finding of a survey, around 90% of the startup worldwide they fail in their motive, and only 10% of the startup entity that will survive. We all know about the valuation, high valuation given to the startup entity, and how that is value is deteriorated in the recent past. Bejuice is one of the example of that. So a valuation of a startup will be always a challenge. So that is one example. Another example, since you are from land and building, so supposing it is a greenfield project, and supposing investment made by AIF that is in a greenfield project. So that how that project will develop, and how the acceptance of that project will be by the general public or intended user, that is a matter of speculation. So it is in the beginning actually making a correct valuation of that will be always challenging. Then a valuation in a digital asset like cryptocurrency and all. So as you all are aware how actually volatile the digital asset, particularly in an era of uncertainty. So possibly we are going through the most challenging time of our lifetime. There is ongoing, it started with COVID 2019, then there is ongoing war between Russia and Ukraine from last more than 600 days. And there is now ongoing war between Israel and Hamas. So we all will appreciate the diplomatic relation between the major country like USA and Russia, or Russia and European country, or the Israel and Arab nation as in general. So how that is deteriorated, and in that uncertain time, if some AIFs make investment in commodity, that how actually that returns will be realized, or investment is in a timberland or agricultural commodities. So exactly what a return over a period of time, because these returns will come at a very long time. So valuation of that will always be challenging. And who is the appointing authority ultimately of the valuer? So that is the fund manager. So ultimately, the valuer will get some pressure from the fund manager also, because fund manager would always like to show his performance, because these returns will come in a very long time. So that is that whatever evaluation is there, the effect of that may not be felt in short term. That effect may come in a very long time. So in that scenario, it will be a challenge for the valuer to make a unbiased valuation, a neutral valuation, independent valuation estimation. So all these are challenges in making a valuation, and these are actually illiquid investment, a private investment, and then the means high value investment, continuous investment. So you are not doing investment in a one time, that will be continuous in nature every 1 month or a 3 month. So that will actually involve more responsibility. When you are getting more opportunities, so more responsibility will also come. So all these are complexities, sir, in brief. I hope that will give a reply maybe in part to your query. If you have
Yes,
any further questions are welcome.
thank you, sir.
So we will move forward with our PPT. This is the circular which is issued by the SEBI on the 21st of June 2023. So just a few months back, and manner of valuation of AIF investment. So you may download this circular. This is a very detailed circular. What I have actually incorporated here, so that is important a portion from that circular. So manner of valuation of AIF investment. So in terms of regulation 23(1), AIF are inter alia required to carry out valuation of their investment in the manner specified in SEBI by SEBI from time to time. So in this regard, following is specified. So I actually SEBI regulation were notified in 2012, but this is actually notified or circular is issued in March 2023. So nearly 11 years after notification of AIF regulation. So valuation of security for which valuation norms have already been prescribed under a mutual fund regulation that will be carried out as per the norms prescribed under a mutual fund regulation, and valuation of security which are not covered in mutual fund regulation. So that shall be carried out as per a valuation guideline endorsed by the AIF Industry Association. So here it is not internationally accepted valuation standard. Here it is not ICAI valuation standard. Here it is a valuation guideline endorsed by AIF Industry Association, which in terms of membership represent at least 33% of a SEBI registered AIF. So that eligible AIF Industry Association that shall endorse appropriate valuation guideline. So that valuer need to consider whether that is guideline are as per the IVS International Valuation Standard, or whether that is as per the European Valuation Standard, or whether that is as per the US appraisal standard, or whether that is as per the ICAI valuation standard. So all that need to be considered by the valuer, and a manager shall also disclose in private placement memorandum PPM. So investment in AIF is made through PPM. PPM we call it as private placement memorandum. In a public issue we call it as prospectus. Red hearing a prospectus. Here it is PPM, private placement memorandum. The details of valuation methodology and approach adopted under a stipulated guideline for each asset class of the scheme of AIF. So that is the guideline, and eligibility criteria for independent valuer. So in this in terms of regulation 23/4 or sub-regulation 4 of regulation 23 of AIF regulation. So a manager shall ensure that AIF appoints independent valuer which satisfied the criteria specified by SEBI from time to time for valuing investment portfolios of AIF. So in this regard, following is specified. So investor valuer shall not be an associate of manager or sponsor or a trustee of AIF. Independent valuer shall have at least 3 years of experience in valuation of unlisted securities. So that is very much required, not valuation experience in a listed security. That need to be unlisted security, because a majority of investment of AIF that is in unlisted security, as we have seen in the beginning of this PPT. And the independent valuer shall fulfill one of the following criteria. So independent valuer is a valuer registered with the Insolvency and Bankruptcy Board of India. So we all are registered with the IBBI or authority. So that is the condition number 1. Independent valuer is registered with IBBI and has membership of either ICAI, that is Institute of Chartered Accountant of India, or Institute of Company Secretaries of India, or Institute of Coast Accountants of India, or a CFA institute. So either it is a ICAI or a cost accountant or company secretary or a CFA institute. An independent valuer is a holding company or subsidiary of a credit rating agency registered with SEBI. So that is the new category actually created through this circular. Apart from the registered valuer with IBBI, this holding company or subsidiary of a credit rating agency who are registered with SEBI, they will get actually opportunity. So actually hitherto it was either a merchant banker, a SEBI approved a merchant banker, or a firm of chartered accountant or cost accountant, or an empanel valuer or the registered valuer. Now there is a separate category, independent valuer, who is a holding company or subsidiary of credit rating agency. So how credit rating agency will be involved in valuation, that is matter of speculation, but that is the norm. So here what I need to highlight is now actually registered a valuer registered with IBBI. They are also empowered to make valuation of AIF, provided they have at least 3 years of experience in evaluation of unlisted security, and they are members of any of these three institutes. Now here actually what I need to highlight actually probably through the RVO, registered valuer organization, we need to consider actually how the engineers are left over. The registered valuer for uh, uh, asset class land and building or plant and machinery, they also should get the opportunity. This is new development, June 2023. So probably going forward, they may also get recognition. That should not be, once it is registered with IBBI, in my view, personal view, that cannot be institute specific, but that is the norm here. So that is very important. And moving forward, so in other words, criteria here is number one, registered with IBBI. Number two, having a 3-year experience in evaluation of unlisted security. And number three, a member of either Institute of Chartered Accountant or a member of Company Secretary or a member of Cost Accountant Institute or CFA Institute. So that is the norms here for making a valuation. Now, actually, that is related to the valuation opportunity. Now, as we have seen, among the three category, fund structure of category 3, that is a very complex and a very important. So that we will cover in brief. So category, but prior to that, as I can see, there is one question. So kindly clarify, apart from RV, even CSCS can provide AIF valuation. So no, sir, actually, if you go through that, these are the conditions. So following is specified. So number one, independent valuer shall not be associated. We will not go through it. And number two, independent valuer shall have at least 3 years of experience. Independent valuer shall fulfill one of the following criteria. So that criteria, one of the following is actually independent valuer is valuer registered with IBBI. So that is criteria number one. Number two, independent valuer is holding a company or a subsidiary of credit rating agency. So that may not be applicable to majority of us. And any other criteria as may be specified. So that is not specified by the SEBI as yet. So necessarily, in other words, the valuer need to be registered with IBBI. That is the criteria here. So I hope I have given a reply to your query, sir. Any further counter question to that, B. Moria, sir? Any further questions, sir? Thank you, sir. Thank you. So we will move ahead. So category 3 AIF, that will require a sponsor with a minimum contribution and a skin in the game. Skin in the game means that is a fund manager will also make investment. So sponsor will appoint trustee and investment manager to form part of the category 3. So what we will do, since time is limited. We will actually understand that through a chart actually. So these are the fund onshore fund structure. So this is the structure of category 3 that is actually onshore. So here that can be means this category 3 fund. If we understand that through this, so that can be either domestic or offshore investment, offshore investor. So what is the actually this domestic and offshore investor? They will make investment in AIF SEBI registration, AIF which are SEBI registered funds, and in turn this AIF will make investment in companies, a different company like investing company number 1, investing company number 2, investing company number 3. So who are the service provider to AIF? That is a fund administrator, custodian of the securities of the AIF, registrar and transfer agents of the securities of the AIF, accountant and advisor. So here advisor actually wherever a fund is invested in a real estate, so a registered reviewer in asset class land and building, at least they can get opportunity to be the advisor. So advisor and accountant, auditors and legal professional. So these are the actually service provider, and means there will be actually investment will be done by a sponsor of the fund and a trustee company. So a trust will be created. A majority of AIF in India, that is by way of creation of a trust, and investment management company. So that is fund manager, investment management company. So that will be regulated through investment management agreement, and investment management company will provide services of how to make investment to the AIF, and that based on that AIF will make this investment, and the in turn AIF will make a payment of management fee and carried interest. So what is carried interest we understood. Along with the investor, the fund manager will also make investment in AIF. So that we know is as carried interest. So this is the broad structure of category 3. That will be both domestic and offshore investor. Then we will not go into a theory. And this is the offshore fund. Offshore fund means a fund which is established outside India. So that we call it as offshore fund. So offshore investor, they will actually make investment in offshore fund, and then offshore fund will make investment in different companies. That is investee company number 1. So even offshore fund can make investment in Indian company. So that is in the form of investee company number 1, investee company number 2, investee company number 3. And this offshore fund, that will have a 2 fund manager. Number 1 offshore investment manager who is located outside India, and onshore investment manager that is located in India. So that is the fund manager structure. And again, this will be common. There will be sponsor and a sponsor contribution and trustee company. So investment in offshore fund will be made by the trustee company, then service provided, and a cross border and India. So that is a offshore fund that will make investment in India also. And for that offshore fund will appoint onshore, that is Indian investment manager. So that is the structure of offshore fund. And then unified fund structure. So both offshore and onshore fund. So this is a brief about the offshore investor and onshore, that is unified fund structure. So they can also create a category 3 in India, and that will be again investment. So that is the unified fund structure, and that is brief about that. That is co-investment fund. So we will not go into then master feeder fund. We will not go into a detail of that. Mainly we will go through now the means fee structure. So fee structure that will come to fee structure for the fund manager. Fund manager will get both a management fee and the performance fee or the carried interest. And there will be certain hurdle rate. So management performance fee, management fee will be paid without any limit. So whether a fund manager has done appreciation or not, a fund manager will get the management fee, but a performance fee that will be subject to actually achieving a certain hurdle rate. So normally the hurdle rate is kept at say a 5% or 8%. So if return on investment is say 8% on annual basis, so fund manager will not get any performance fee. But if return is more than 8%, if 8% is the hurdle rate and a return is more than 8%, so in that case, the fund manager will get the performance fee. So that is actually, then we have this clawback provision, high watermark, other fee. So since time is limited, we will not go into that. And then we have a trust, so which is determinant and indeterminate trust. So that is also a very important. And this is actually how it is taxed. So these are the provisions of Income Tax Act. So how actually a taxation is done. So with that, actually, from my side, it is over, and it is weekend day. So actually, we, I will not drag you much. Actually, I will not bother you much. So from my side, it is over, and I thank each one of you for making this interactive and your attention throughout this session. And before we end, actually, if any further questions are there from your side, so questions are welcome. Otherwise, we will end the session here.
Sir, as of now, there is no room for plant and machinery or land and building value.
Yes, so that is what I highlighted, sir. But this is a recent development that is actually a circular, as you have seen, that is issued in June 2023. And that needs to be properly highlighted because IBBI registered valuer, that is under three categories. So actually, how only one category is recognized, that needs to be represented or highlighted, sir. But as of now, as we have seen, actually it is SFA valuer who are the members of either Institute of Chartered Accountant of India or Post Accountant or Company Secretary or a CFA. So they are actually entitled to make a valuation.
Thank you, sir.
Presently, we can work as consultants too.
Yes, consultant definitely. Consultant actually you can very well work as a consultant. And I thank each one of you for your kind words to a chat box. You have appreciated my effort. So I am really thankful to each one of you.
Thank you very much for
Thank you.
a wonderful session, sir.
Thank you, sir. Thank you.
Thank you, sir.
Thank you. So, Sarmaji, can we end
Yes, sir.
this?
Yes, sir.
Yes, sir.
Yes, sir. So we have come to the end of this CEP. Thank you very much, sir, for explaining the topic very nicely and in detail, as always. And it was a new topic, and it was about affording new opportunity for our valuer members. So we have taken up this CEP. Thank you very much, sir, for explaining everything very nicely. And thank you, participants, for participating in the CEP. Please share your feedback, and please also share newer topics for our future CEPs. Thank you very much. Thank you, Kajal.
Thank you, sir.